Good morning, UPBOptionMillionaires.com. It is Monday, May 12, 2014. It's the S&P 500 ETF, the spiders. You see support since the start of the year really has been at this 184 level. Briefly broke below it in the middle of April. And now looking at the last about 30 days of trading action, once we broke above the 187 level, especially into May here, it's been acting as support. And really the last 10 trading sessions has been, in spite of some wild swings, just another phase of consolidation for this marketplace. We moved up to this 187 level, briefly dropped below it back on the 7th of May, and look poised here. We got futures are higher to come up to the all-time highs, and you pull back in a longer-term perspective. You can see we're right at the top of this channel. The question is, and I've been bringing this up for quite a while when I'm doing the videos here, are we looking at a left shoulder, a head, and a right shoulder? We need to break below this 184 level and hold below it, and then hit down to this. This would be the neckline, and then we could be looking at a possible long-term top for this market. However, the trend still remains to the upside. So until that happens, you got to stay with the trend, which is upside. And you've been looking at the market, even the last couple trading sessions last week, it looked like it was going to crumble. And it didn't. And if you look at this, the NASDAQ, the QQQ, it's a 5-year weekly chart. You see this beautiful broadening wedge. Okay, it's the opposite of a megaphone topping pattern. This is a consolidation pattern, and we're right at support here. And to me, it looks like we're going to blast to new multi-year highs here for the QQQ. In spite of what you're hearing, everybody else talk about the divergence between making new highs, and we have small caps lagging, and a lot of momentum names getting killed. But think about it. After the carnage, we've seen a lot of the stocks like Twitter, Facebook, even Google, Amazon, which is down from $400 to $290. I mean, it just got destroyed. Here we are. NASDAQ, the technology stocks still look poised here for breakout to highs. But let's look at some action we have after the bell today. We have Magic Jack. Symbol is CALL. Broke up to almost $25 a share earlier this year before pulling back. Here it's at support. We'll see if that can get another nice spike after earnings, as it did last earnings report. We have Take-Two Interactive. This is after the bell tomorrow. The trend remains higher since the lows in 2012, even the short-term trend. I believe it was Electronic Arts, just got upgraded this morning. So I think the analysts are looking for higher prices here. That'd be TTO. That's after the bell tomorrow. We have, I believe, before the bell tomorrow, John Deere. This is a 5-year weekly chart here for John Deere. And you can see we're right up against long-term trend line resistance. If you actually look closer, we broke through it briefly at the start of April, broke through it, came back, been kind of trying to break through it again, and then finally this month, the last couple of days, we broke above that long-term trend line resistance and have been consolidating. You'd almost say this is somewhat of a short-term flagging, bull flag, and that's going to lead to higher prices. This morning, analysts came out speaking negatively about the stock, lowering their price target, so that might weigh in the shares today, and then we'll have earnings really tell us the direction of the stock. We have Macy's reporting this week. I believe it's Wednesday before the bell. We actually have a lot of retailers, Macy's, JCPenney, Kohl's, Walmart, all reporting earnings, so that's going to give some indication of consumer activity and what's going on. They're spending money, they're not spending money. We have JCPenney after the bell on Thursday, I believe, Walmart, KSS, which is broken above long-term channel resistance. Let's look at this. There we go. That's along a 5-year chart. Channeling finally broke above it, so that's bullish action. That's a stock you would probably see trade higher post earnings. How about Twitter? Twitter declined significantly. I wrote a post on the blog at optionmillionaires.com talking about how I like Twitter, and the next day it dropped off a cliff. I believe it was right here. As those shares that were locked up were finally available to be sold, and sell they did as the stock dropped briefly below $30 a share before recovering. Pre-market here, it's up almost $1 up to this 33 level. So it looks like we're going to come back up, and I'm looking for a close of this gap and then a close of this one before we head on our way to 45 and then 50. I think it's going to be a lot like Facebook when it dropped to about $17 after its IPO. So it's a good thing. If you're looking to get into Twitter, now's the time. And another stock, looking at DDD, they had some news out before the bell this morning, but you can see it tried to dip below this 46 level, act as support. I'm looking for this again. I think this is going to be a $60, $70, $80 stock. Heading into the summer, FEYE, which got destroyed post earnings. I was actually in the calls, so my options went to zero when the earnings action took the stock down 25%. And you can see even on Friday it was selling off. This is going to be a nice reversal trade when indeed it does reverse course. This morning I believe it's flat, so I'm actually going to look to get into a couple calls this morning. Hopefully it pulls back a little bit. And some analysts came out last week, in spite of the weakness, still behind the stock, looking for gains. So it's going to be an interesting week here. Not a lot of earnings. We have CSCO reporting earnings. I believe that's after the bell on Wednesday. And you can look, this is also a stock that has some significant support and trend line resistance lines as well, where you can look, as we did. I put a post up at the blog at optionmillionaires.com talking about this. This was an earnings report right here, how it was up against long-term resistance. It fell, and now it's clawing its way back. So if you look right here, we're at 23 bucks. I wouldn't be surprised to see it come back up to this $26 range and try and make another test, as it did back in 2007 before the financial crisis tore it to shreds. A test of this $26 level here for CSCO. All right, UPB here. I'm a little bit under the weather. I don't know if it's all this pollen or allergies, but just not feeling so hot today. But hopefully I'll get better as the week progresses. Stocks are higher. They're poised to start the week off trading higher. And we'll see if that action can hold. This past Friday, was one of the first trading sessions on a Friday that we didn't see the fade continue. And you look at the action at the start of the day, we started out lower and we clawed our way back. And we're about up at this level here pre-market. So, all right, UPB, everyone have a great trading day. I'll see you in the chat room at optionmillionaires.com. Goodbye.